So, welcome to another accounting video. Today, a cash flow statement. I've taken this from Accounting 3 Jan 2013. Question 6 I'm not going to do question 7. So, I think a quick thing to say is, what is a cash flow statement? Essentially, it's a statement just like the balance sheet and income statement, but what this statement does is it essentially shows how cash has flowed in and out of the business. Sometimes a misconception is that the income statement does that. It is not that. Revenue, expenses, that's not cash in a sense, that's relating the incomes and the expenses to the actual accounting period in a sense, whereas this is the actual cash, because profit is not cash, as we know. Profit and cash are two completely different things. So with all the cash flow statements, at first you always have to reconcile your profit or loss from operations with the cash used in operations, but they've already done that for us. So all we need to do is do the cash flow statement, or the statement of cash flows. Either way is fine. So it's worth 18 marks, so we've got to make sure we do some workings to get all them marks. And I'm given two balance sheets, the previous year and then the year before that. The latest balance sheet is always the one on the left, and I've given a few pieces of additional information, but we'll get to them later on. So what I've done here is sort of map out the skeleton of all cash flow statements, or statements of cash flow. So we have our cash used in operations, which I'm taking from here because it's telling me to start there. Start with the cash used in operating activity, so it gives you a nice place to start, and it's quite handy for this question. These are all the things that you have to put into a cash flow statement. So cash flow from investing activities, so stuff like purchasing non-current assets. Financing is like issuing shares, issuing bank loans, etc, etc. And in the end we have a change in cash and cash equivalents, and then we have at the start and the end, and hopefully the start and end difference is the same as the change. Then we know we've got it right. So I've already put in interest paid, and we know there's interest in this cash flow statement essentially because we have a debenture, and obviously you pay interest on a debenture. A debenture is a interest only loan. So we're going to have to do a little bit of work in for this, because there's an additional information about this. An additional 6% debenture loan was taken out on the 1st of July 2012, so that's mid-accounting period, so it's not going to be straightforward. However, what is straightforward is the interest paid originally on the original loan. So 60,000 here, times by 6%, so 0.06. But what I also need to do is account for this new loan we've taken out. So an additional 6% loan, well, we can see what that additional is. It's just 85,000 minus 60,000, so it's 25,000 times by 6% again. However, we've only had it for 3 months, this debenture loan, because our year end is the 30th of September, so we've only had the loan for July, August, September. So what we're going to put here is just 3 over 12. And that's just going to give me an interest figure of 3975. Sorry. So now what I can do is essentially, first of all, I need to just put my reconciliation total in. So the cash used in operations is negative 31,225. I also now need to take away this interest paid as well. So 3975. So one other thing that we know we've paid during the year is this tax here, because it's decreased, hasn't it? It's gone from 6,500 liability to 0, so obviously we must have paid it because it's gone down. So this can be taxation paid, or tax paid, however you want to put it. So that was W1, interest. Working 2 is taxation. So what I like to do when I'm working out tax is use a T account. So tax is a liability, and we know that liabilities go up on the credit. So the brought down for tax is going to be 6,500 on the credit. So at the start of this year we have the closing figure for the previous year. So 6,500 is the brought down, and we know our carried down is 0. So for this to balance, we need a bank figure here, don't we, to say that we've paid it. So that's obviously a cash outflow, isn't it? Because if you think about it, if this bank is on the debit of the tax account, it must be on the credit of the bank account, and we know that bank goes down on the credit side. So we know we've paid 6,500 in terms of tax in cash this year. So that's just going to be negative 6,500. So now we can just total all them negatives up. They're all negatives, remember. So we go further into negative. So now investing activities. So this has got a few pieces of information about this. First of all, we have our non-current asset figures here. So we have a brought down, carried down. But we also have a few other things. We have a sale of a non-current asset here during the year, and we also have our depreciation figures. So there's a few things to balance here. But there's one very easy way to solve this. This is just a simple T account. So how am I going to solve this? Well, essentially, our non-current assets is an asset, so the brought down is always going to be on the debit, and we brought down 247,800. So I've just lifted that from the 2011 figure, haven't I? So now, what decreases that valuation? Depreciation, of course, does. And I'm just going to lift that from the reconciliation on the other question page. And we've also got rid of an asset, haven't we? A non-current asset with a net book value of 14,500 was sold during the year. So this is in net book value. That is a net book value. That is a net book value. So I can just put NCA sale. It can say bank because we're receiving money for that, aren't we? But I'm just going to put NCA sale just for the sake of explaining it. So 14,500. And we know what our carry down is, don't we? Just 262,900. I've just lifted that from the balance sheet here, haven't I? So now I just need to work out how am I going to find this figure for purchases, etc. Well, first of all, there's a revaluation here. We've gone from 25 to 42,500. So we've had a revaluation of 17,500. So now what we can work out is the amount of the purchase. So I'm just going to put bank here, but that essentially means NCA purchase. So now what needs to happen is these two sides need to equal each other. I'm just putting X to show that they need to equal each other. And if you work out, you have to do all these figures here, take away these two figures here, and you'll come up with a purchase figure of 38,250. So now what we can do is lift that into our cash flow from investing activities. So we have a purchase in NCA, which we've just proven with the T account, and we also have that point 4, additional information 4, don't we? We have a sale, so we'll just have proceeds from NCA sale. So it's simple enough so far. So the purchase was simply 38,250. It's cash out because we're purchasing, so that's a negative. And we've received, well, it's pretty simple to work out what we've received. It's the 14,500. And some important information from the reconciliation is we haven't sold it for that, if you notice. Then it was sold with a net book value. That does not mean we sold it for that figure. What we actually sold it for was the net book value plus this figure. We sold it for a profit, so it must mean we sold it for more than what we valued it to be. So the actual value that we received in cash for this asset is 18,125. So proceeds from NCA sale, 18,125. So that's it for investing activities, and that just comes to a negative again, 20,125. So if I do negative net cash used in operations minus this investing activities figure, I'm going to get a figure of 61,825 negative. So that's the total so far that we've got. So next point I need to go on to is the dividend that we've paid. Ordinary share dividends were paid at a rate of 7.5 pence per share based on share capital at the end of the first year. So this is quite simple. So with all dividends, what do we need to do? We need to work out the number of shares we had in issue. So it's just number of shares September 11th. So end of the previous year, or the previous year, I should say. So how do we work out how many shares we have? Well, we had 120 at that point, £120,000 worth of shares, and we're going to divide it by the value of each of them shares, 150. So we have a total of 80,000 shares. And now it's simple from now on, it's just 7.5 pence per share. So the dividend paid is essentially the number of shares times by this 0.075, 7.5 pence. So the dividend paid is just £6,000. Simple as that. So what I can do now is just put this into my cash flow from financing activities section. So this was W3, W4. It's always good to write these workings references in terms of helping the examiner in terms of presentation. It helps them understand where your answers are coming from. It can help you get marks, because if you've just got workings scattered everywhere, they may not know where these figures are actually coming from, which obviously can be an issue. So that's negative 6,000. Easy enough. So we mentioned earlier there's also been a debenture issue. We've gone from 60,000 to 80,000. So we just issued some more debt essentially. So a debenture issue is essentially just 25,000. We've received the money, haven't we? Our liabilities increased, so we've increased more money. Just like a bank loan, if you ask for a bank loan, you receive the money, don't you? And you pay it back later. So that is a cash flow into the business. And also, one final thing is the issue of shares. We've noticed that the ordinary share capital here has gone from 120 to 144, but also the premium's gone up as well. So we need to account for this, because if you issue shares, you're going to make money, aren't you? We're giving out shares, we receive funds for them shares. So this is essentially the total income for this share issue is the share capital, so the share cap increase plus the share premium. I'm just going to abbreviate so I can fit it on. So it's the increase of this. Adding up them two increases will give you the amount that we've received in shares from shares. So the ordinary share capital's increased by 24,000, and the share premiums increased by 6,000. So that's 30,000 in total. If you can hear fireworks going off, there's a very good reason for that. It's bonfire night, so my apologies if you can hear a lot of explosions. So, issue of shares. W6, so our final working, and we received £30,000. Gives a net cash in from the financing activities of 49,000. So I'm just going to add them two together, and I'm going to get negative 12,825. So now what I need is for the difference of these two to be 12,825 negative. So we need this figure, take away that, equals that. So essentially what I need is the start figure minus this decrease in the cash flow, or the cash that we have in a sense, equaling the end figure. So how do we work out our cash and cash equivalents? So, well, in 2011 we have 1550 in terms of cash and cash equivalents, but we also have a bank overdraft, so that's negative. So we're going to do negative this figure, add this figure, and that gives us 15,600 negative. So it's just the same again with the latest balance sheet. We have a positive cash and cash equivalents with an even worse overdraft. Notice the overdraft's increased, it's a bigger negative now. Don't get tripped up by that. And if you add them two figures together, you get 28,425 negative. So how are we going to check this? I've got my start figure, so negative 15,600 minus 12,825. 5, and that does indeed give us negative 28,425. So that's it. That's the cash flow statement done, and also checked to make sure it's right. I hope that was handy. Oh, just one quick thing. I get a lot of emails about textbooks and which textbooks I used. This is the only one that I used during my exams, but I also used the past papers a lot. That was really handy to go through past papers and go through mark schemes. So this is the only textbook I ever used. I never used any else. I won't be able to recommend any others. But besides that, keep sending your emails in for recommendations, and I'll see you in the next video.